All right, good evening, ladies. People are getting scared out there. People are calling for the cycle top already. So in today's video, I want to go through every indicator that you need to be aware of in order to time the top correctly, in order to sell in and around where the top is most likely going to be. We're going to go through the most interesting indicators, the most useful indicators, as well as some charts and some non-technical indicators, just, general vibes on where I think the cycle is and if we have topped already. So with all of these indicators, we can't just rely on one indicator to say, oh yeah, the cycle is topped, I should sell everything right now. No, it's got to be a confluence of a number of different indicators. And if a lot of these indicators are flashing, that kind of means that we're going to go through like what levels all these indicators are, and if all of them are kind of flashing red hot, or if a lot of them are kind of flashing warning signs, at that point we know we're in frothy conditions. So when we're in frothy conditions, it kind of means, like, for example, if countries are buying Bitcoin, if S&P 500 companies are buying Bitcoin, if normie retail, if all your cousins are asking you about crypto, that kind of signals that we're in frothy conditions. Probably a lot of these signals will be flashing. And at that point, you kind of have to think, okay, who's the marginal buyer at this point? Who can realistically come in and buy our bags after all of these people are in? When there are no more marginal buyers, and meaning that we're in frothy conditions, that kind of means that the cycle has to top in and around that time. But at the same time, we don't have to get to frothy conditions for us to top. So I'll say that again. If we get a lot of these indicators flashing and there are no more marginal buyers, it means the top has to be close. However, we don't have to get to those frothy conditions. We can top before them, but like, you can sell before we get to those frothy conditions, because there's no guarantee that we do get to frothy conditions. We could just have a recession tomorrow, World War III could happen, and we could just nuke, and we never get that crazy blow off top. We never get those really frothy conditions. We never get those sell signals that flashed in previous cycles on all these indicators that I'm going to share with you today. So just keep that in mind. We don't have to get these frothy conditions, but if we do, that is the right around the time that you need to be selling kind of aggressively, and we probably have, a few months in those really frothy conditions. So let's move on and see how frothy things are looking already, because everyone's saying, okay, the cycle top is in, or a lot of people are starting to think that and starting to de-risk, and people are starting to be pussies. So yeah, let's get into the first few indicators. So what is the point of these indicators? Well, realistically, trying to predict the cycle top ahead of time, to say like, okay, Bitcoin's going to top out at 150K because it did that well of a return in the last cycle, or Bitcoin's going to top out at 300K because X, Y, and Z, is kind of useless. Like, trying to predict the final top price way ahead of schedule isn't very reliable. But what is much more reliable is using indicators in the time of the moment to be able to determine whether things are looking toppy or not. So that's why we're going to be looking at indicators, and I'll probably be updating you as these indicators go along in the cycle and how frothy things are getting. And I did do this video like a year ago, last summer, for my course video. So if you want to get my course, you can join it in the description, and it's my private cabal. So this was like released almost a year ago. So we're kind of doing an update on all these indicators. And if you want me to release that video, it's actually very useful on how prescient it was. Anyway, so the first indicator that we're going to look at is Bitcoin dominance. So this is how much of an alt season we are in. So as you can see, the Bitcoin dominance chart, the first thing I'll say, you can see actually the squiggle I drew last summer. It's actually been tracking it pretty well, just continuing to grind up. And very soon, according to this squiggle that I drew, we're going to dump and get a crazy alt season. So when this Bitcoin dominance dumps, that means alts are going crazy. And you kind of want to be selling in this lower region wherever it kind of starts stalling out. So that happened in the last cycle. You can see Bitcoin dominance absolutely nuked from about 72% all the way down to like 40%, and just chilled around there. So that was like the perfect time to be selling all your bags once Bitcoin dominance nuked. So I will say, I don't think Bitcoin dominance, I think this squiggle might be a little bit inaccurate in the fact that I don't think Bitcoin dominance is going to nuke as hard this cycle. I do think it will drop, but I don't think it's going to drop as hard and get as low as it did in the last cycle. The reason being is because I don't think Ethereum's going to outperform Bitcoin massively, and that's like the big driver of Bitcoin dominance nuking. So I don't think Ethereum's going to massively outperform Bitcoin, probably will outperform Bitcoin for the rest of the cycle, but I don't think it's enough to send it down to like 40% or 30% like it has in previous cycles. But it is an indicator we should keep an eye on. And I do think once it starts nuking or dropping significantly, you know you're kind of in all season, and once it starts chilling and flattening out, that's probably a good indicator that, okay, potentially we've topped. And from this indicator, we can see we are completely still stone cold. Nothing to worry about using this indicator because Bitcoin dominance hasn't dropped at all. And unless the only thing to do well in this cycle is Bitcoin, from a frothy conditions perspective, we're not in a danger zone on this indicator on Bitcoin dominance. So we passed the test, we passed the first test of Bitcoin dominance, still looking good there. And because of this, any profits that I have been taking, which I'll talk about towards the end of this video, most of the profits I haven't been taking is actually on Bitcoin, even though I think Bitcoin has more legs and has more room to run. Because Bitcoin dominance is so high, I kind of want to be holding altcoins, and the first thing I'm going to take profits on is my Bitcoin. Even though I still think it will do well, I think altcoins are going to have an alt season, and this Bitcoin dominance is going to drop. So the first thing to take profits on is probably the Bitcoin when you look at this chart. If we do get that alt season, not guaranteed. So that's good. We've passed the first test. So what's the next thing we're going to look at is the RSI. So we kind of want to look out for bearish divergences on both the RSI and the volume. So first we're looking at the RSI, and this chart is from Crypto Clots, Doug Funny on Twitter. So I'll link his Twitter handle in the description. But I just robbed this from him, and he pointed out this trend line of the RSI. So if you look at the bottom of this chart, you can see the RSI has crashed up and touched this trend line in all the previous cycles around the top. And so far, we look like, unless the RSI just never gets as high as it did relative to previous cycles, and we don't touch this trend line, like maybe the cycle could end early and we don't get these kind of frothy conditions. But on the RSI perspective, yeah, the RSI is strong, but it's not anywhere near these kind of extreme froth conditions that we experienced in previous cycles. So once the RSI starts to make its way even closer to this trend line, or even touches the trend line, you know that, okay, potentially things aren't looking good. So from an RSI perspective, we look pretty good from this trend line, but also you want to look out for bearish divergence on the RSI. So here's another chart showing in the last cycle. So if you look at the RSI at the bottom of this chart, you can see this little red line that I drew on the RSI, kind of showing that the RSI was going down. So that's the relative strength of the move was decreasing, but the price was still grinding up. So that's kind of what a bearish divergence is for RSI. And for this cycle, we can see the RSI hasn't really been grinding down just yet. Now, it did kind of grind down during that summer lull that we had, which turned out to be not a good time to sell. So this indicator, the bearish divergence, maybe isn't perfect, but it did call the top in the last cycle. So it's just another thing to keep an eye on. The RSI having a bearish divergence, so price ticking up, but the strength of the move not keeping up with the move itself. So basically the RSI dropping, but the price going up, but the price is kind of flatlining, even though it's still going up. The strength of the move isn't going up with it. So potentially, you know, people aren't as confident that prices are going to go higher, and some people are selling, and that could signal a top. So from that perspective, I think right now, the trend line one looks fine, but the divergence one, still not really enough data to go off on at this point. So I'd say we just about passed that from a cycle top frothy perspective. The next one you want to look at is volume. So we want to look out for a bearish divergence of volume. So in the last cycle, we can see that the volume, even though the price was increasing, I drew a kind of a trend line on the price was kind of generally increasing, the volume was actually decreasing. So, you know, this is all very rough. It's kind of just an eyeball test. It's not like super accurate. But you can see in general, on average, the volume was decreasing even though the price was increasing. So that would be a bearish divergence on the volume. And comparing that to this cycle, you can see there's some squiggles I drew last year. Not tracking super well, but somewhere in the right range. But we want to look at the volume, and the volume decreasing, or is the volume staying flat or actually increasing? So I put in two little volume bars, two ways people measure volume. As you can see from like the summer highs of volume, the volume is actually increasing. If you look at the very bottom one, the blue volume chart, the volume is still strong, so that's a good sign. And the green and red volume still looks like it's trending down a little bit, potentially in the short term, but overall not looking too bearish. So, you know, I would give this maybe, kind of looks a little bit bearish, but, you know, not extreme bearish. So maybe a 5 out of 10 out of the frothiness scale. The next indicator we're going to look at is called the pi cycle top indicator. I forget how this is measured, but it's accurately predicted the top for the last 2 cycles. So basically when this purple line touches this green line is a perfect time to sell. So you can see in 2017, these lines crossed and that was a great time to be selling. Same in 2013 and the same in 2021. Once this purple and green line touched, that was a great time to sell. And thank be to God, we haven't touched yet. So according to the pi cycle top, we're still looking good for another move higher. But yeah, once these guys start to cross or get close to one another, you need to be very, very careful. It looks like if we have a very, very strong pump over the next 6 months to a year, these will probably touch. And yeah, at that point, you want to be very, very, very careful. So yeah, from that indicator, we look fine. So that's good. So I think for most of the indicators right now, we look okay. Maybe the volume one, we look a little bit bearish. The volume hasn't been as strong. It's kind of decreasing. The RSI also kind of unclear, but for the most part, we don't look extremely toppy on these indicators as well as the pi cycle top. The next one we're going to look at is long-term holder supply. So this is the amount of Bitcoin held by diamond hand hodlers. And as you can see, once prices start ticking up, the long-term holders start offloading their bags. And you can see this has already happened. This happened in the March top. So when Bitcoin had that bit of a lull over summer, people were kind of the long-term holders were taking profits. So you can see that drop there. And you can see in 2021, we also had a big drop at the start of the big bull cycle, and the exact same thing in 2017, the exact same thing in 2013. And you can see these big dips, and we're starting to get into a dip right now. Now, is that bearish? Does that mean we've certainly topped? No, because you can see in 2017, we started dipping really fast when Bitcoin was still only 3,000. Similarly, in 2021, we started dipping really fast when Bitcoin was still like 18,000. So in this cycle, we started dipping when Bitcoin hit about 100,000. So from this cycle, like, it's not really super accurate for calling the tops because the long-term holders start selling quite early. So it's kind of hard to predict the tops, but it's good for predicting good times to be buying. You want to be buying when the long-term holders are buying as well. So from a cycle top indicator, there's not much that you can learn from this, but I still wanted to point out to you that we're not in a bear market anyway. Long-term holders are dumping some of their bags, and that is something that they do at good opportunities. Something to be aware of, probably a 5 out of 10. Not really a cycle top indicator, but something to keep in mind that long-term holders are definitely not adding to their Bitcoin exposure at these prices. Right, so the next indicator we're going to look at, again, I don't know how this one is measured or what the hell this one stands for and means, but who cares? It's still an indicator that we can use. So in the last cycles, we had this extreme pointy blow off tops on Bitcoin where it got into this like red zone, at least touched the red zone. And this is the MVRV Z-score, whatever the fuck. I don't know what it is, but it's been pretty good at identifying frothy signals. And at the moment, you can see that the MVRV score is only at like level 3. So I think if this got to like, you can see it's kind of in a downtrend. Like last cycle, we didn't get such a crazy wick up on the MVRV score. However, we did still get all the way up to 7, and we're only at number 3 right now. So realistically, if MVRV score is in a bit of a downtrend, we should at least probably get to like number 4, number 5 if we do get into frothy conditions. So we are still like definitely not at the bottom. This is actually a beautiful indicator to buy the bottom. As you can see, once it gets into that green zone, it's a great place to be scooping up Bitcoin. Nevertheless, according to this, we're like halfway, maybe 3/4 way through the bull cycle, not in frothy conditions. Potentially, if you want to draw a trend line, we're getting close to that, where that trend line would touch. If you draw a trend line from 2018 to 2021 to 2025, you can see that trend line, it would be getting close to it at probably around level 4. we're still not at level 4. So we're passing for this one, but it's one to keep a close eye on, because potentially if it does just only get to a trend line, that would be a frothy condition. But I'd say it could get easily to level 5 or something in this bull cycle, based purely on my balls. I've no real, don't put that in. Some other indicators that we can look at is Google Trends. So I put in buy Bitcoin and buy crypto for these Google Trends. Now, I would say, like, kind of throw in a few different terms yourself that you think would be useful. Putting in something like Bitcoin probably isn't very useful, because probably a lot of people know what Bitcoin is already or have heard of it, so aren't going to be Googling it as much in this cycle. So people already know, who have heard of it, like, know roughly how to buy Bitcoin. So that's why buy Bitcoin like never reached its all-time high that it reached in 2017. Buy crypto, that term actually made a new all-time high in Google Trends. Who knows if it makes a new all-time high in this bull cycle, but you can kind of come up with your own ideas of what would be a good trend to look out for. Maybe like meme coins. I know meme coins, I checked the Google Trends on that, and it's like way higher than the previous cycle. So that's just something to keep an eye on. Another thing that you could keep an eye on is the app rankings. So stuff like obviously Coinbase, but probably a lot of people still have downloaded Coinbase from the last bull cycle. But if that gets to really high app rankings, something to be aware of. Another app rankings to be aware of is Phantom. I think that was going to make huge, that's going to get into like really high app rankings in this cycle when we're in frothy conditions, as well as Moonshot. We've already seen them performing well in terms of app rankings in this cycle already. So keep an eye on those app rankings and Google Trends. And from a basic charting perspective, Bitcoin looks fine, Solana looks fine, Ethereum looks like it's going to go to 0. But yeah, for basic technical analysis, we still look okay. What you would want to be looking out for is a lower high. So that would be like a complacency shoulder. So you can see in the 2021 cycle, in the first top that we had like 3 little highs that were gradually getting higher. And then we had one lower high, and then we absolutely nuked. So you want to be looking out for that lower high complacency shoulder. And that would also, like if you drew a parabola from the start of the move in 2021, that lower high actually was the drop that broke the parabola to the downside, came up and retested the parabola, and then broke down. So breaking the parabola or a lower high, that would be like a TA perspective, something to be aware of, okay? But for right now, we look absolutely grand in terms of Bitcoin, which is nice. In terms of vibes and not charting stuff and no indicator stuff, Solana's basically not broken all-time high. Ethereum hasn't broken all-time high. We didn't get a crazy alt season where everything went up. We did get some pockets of outperformance, like meme coins, like AI coins, but that was kind of it. And some like random niches and random narratives that popped off. So we didn't get crazy bull cycle mania all season. Solana, like the majors, have barely broken all-time high. The only thing is really significantly broken all-time high is Bitcoin. So from that kind of perspective, probably not in frothy levels. The CT indicator, the crypto Twitter indicator, right now everyone on crypto Twitter seems super depressed. A load of people are calling for, oh, this might potentially be the top. A load of people are ditching their .eth usernames. People are saying, oh, they're taking profits here. They're moving a good portion of their crypto profits into stable coins. That's generally not the kind of vibes you do see in frothy conditions. Generally in frothy conditions, everyone is like, oh shit, this is just a dip, we're gonna go way higher, or oh my god, I'm making so much money, I'm gonna buy more. You know, that's kind of the mentality in frothy conditions. It's not really, oh, the cycle top might be in, oh, watch out, like, you know, I'm scared, I feel depressed, I didn't make as much money as I thought I was going to be, or whatever. So from a CT indicator, vibes indicator, it's not looking frothy in my opinion. To add to that, in my opinion, normies haven't really entered the chat. Now, obviously some normies have come in, and especially with this Trump coin, I think like 400,000 new Solana wallets were created from people who've never had a Solana wallet before, like completely unlinked wallets. So like 80% of Trump holders, the Trump meme coin holders, were normies. So that was a huge influx of new participants. But apart from that, like, I think there were more normies in the last cycle than there are still, even at this point in the cycle. So I think this Trump thing might catalyze a lot of retail coming in, a lot of normies coming in. But up until now, it hasn't really been crazy normie season where, well, I suppose there was XRP pumping, which is definitely a real normie coin. So yeah, maybe like a little bit of normies coming in, but not as much as I would have anticipated for the cycle top or for like extreme froth conditions. So maybe a 5 out of 10 on the danger zone in terms of normies. From a 4-year cycle perspective, we'd estimate that the cycle top would be in by, Q4, Q3 or Q4 of this year, which has happened in the last 3 cycles. So it could happen again in this cycle, and we're still in January. So if the 4-year cycle holds true, we have all the way until like September at the very earliest, if that holds true. Now, do I think we get all the way to September? I wouldn't be shocked if we topped out in March or April or something like that, or summertime, if we topped out a little bit before. But I do think right now, January, still, if the 4-year cycle is to hold true, and the 4-year cycle happens because of there's going to be massive liquidity injections coming for the next year, for the next few months, because all the governments have run out of money. They need to drop interest rates. So there's going to be an influx of cash coming in. They need to roll over their interest rates, so they need to sell more bonds at lower interest rates. So that's why there's going to be trillions printed very, very shortly, which pumps the crypto markets to Valhalla. And then towards the latter half of the year or into 2026 is when they're probably potentially raise interest rates again. That's what's happened in previous cycles. So at those points, that's like more likely when the top would be, when interest rates start to roll back up again. So do you wait to sell your crypto until there's extreme froth conditions and you just sell everything in one clip? No, that's not how I'm doing it. I've already started selling very small amounts of my Bitcoin stash. I told you that at the start. And I kind of want to show you my rough plan on how I would exit the markets. So this is assuming you own 1 Bitcoin and let's say you own a load of altcoins. So say 50% of your portfolio is in 1 Bitcoin and 50% of your portfolio is in altcoins. So the left column here is the price of Bitcoin, and then the one next to it is the amount of Bitcoin you're going to sell at that tranche at that price, and that's your remaining Bitcoin balance, the dollar amount that you've sold, and your cumulative sells. So this is kind of, I can leave this Excel sheet in the description, but this is kind of how I'm thinking about it. Now, obviously, I'm not telling you how much Bitcoin I have. I don't have, anyway. But this is just an example if you had 1 Bitcoin. So you can see as the price of Bitcoin ticks up from 80,000 to 90,000 all the way up to 240,000, you're increasing the amount of Bitcoin that you're selling. So the first tranche you're selling 0.025 Bitcoin, which is $2,000. The next tranche you're selling 0.275 Bitcoin. So you're increasing it by, I think it's 10% or something, all the way up to, I think you get all the way to $230,000 Bitcoin. So if Bitcoin got that high, which I think is, I don't know, possible, but improbable. But at that point, you would have sold all your Bitcoin and would have cashed out for 156,000. But say we didn't even get that high. We only got to 150K. You still sold $34,000 and you still have 0.7 Bitcoin. You can extend that out to the other half of your bag, your altcoins, and say, I want to sell 0.0. So that would be 2.5% of my altcoin stash once Bitcoin hit 80,000. So I made this last summer. So I haven't completely stuck to this because it's kind of hard to sell when things are going up, but I have started to offload a little bit of my Bitcoin at these prices. You kind of have to have a plan and you kind of have to stick to it. And I made this plan last June, so I'm going to try and stick to it to some extent because I don't want to round trip my entire stash this cycle again. So I do want to come out with some money at the end of it. And I think it's unlikely that Bitcoin gets way, way higher than 240,000, but you can mess around with these numbers yourself and you could just sell 1% of your portfolio a week is another nice way you could do it for the entire year, and then you've sold half your portfolio by December. So that's a nice way to get an average exit and still have half your portfolio or half your Bitcoin if you want to hold over multiple cycles. Or you could sell 1% and then in Q2 you could sell 2% of your portfolio a week or something like that. You get me. But make a plan and stick to it. So that's kind of my rough plan of, instead of Bitcoin sold, you can just put that as a percentage. And what do you do with all this cash? What am I doing with all this cash? There's a couple of things that I'm doing with the money. We can keep some of it, put it You could buy a house with it, or you could put it as a down payment. You could go on holidays, you could do whatever you want with it. Just keep it for the bear market. But what I'm doing is I'm putting some of it into JLP. I've talked about JLP a lot of times because that's not going to crash as hard as Bitcoin and Solana, but it's still kind of, if you still want to be exposed to the market, JLP is a good one to put your money in first, because it's still going to increase over time. So you can see the chart of JLP has just been beautiful with not huge drawdowns. So that's really, really nice. The other place I'm putting my cash into is Tesla stock. I think Tesla stock, here's like Tesla versus Bitcoin chart. It looks like it's at the bottom of the range. So buying more Tesla, selling a bit of Bitcoin, throwing it into Tesla. I think Tesla is going to do phenomenally well over the next 5 to 10 years. And because crypto ballooned over the last couple of years, my Tesla bag became a much smaller part of my portfolio, maybe like 10 or 15 to 20%. I want to raise that back up to like 30% at minimum, eventually 50%. By the end of the cycle, maybe like more than 50%, just throwing everything into Tesla. That's how I'm going to play it. If you're not interested in Tesla, you don't have to buy it, but that's what I'm doing anyway. JLP is another one, or you can have your stables on chain and earn some money. Now that's a bit risky, but you can put it into Hyperliquid's liquidity vault, another nice place to cash some stables. I think that's making about 20 to 30% APY. You can also land it on Camino, that kind of thing. But don't put it all your stables into one DeFi protocol, and take some actual cash out and put it into your bank account, and I promise you that will feel good. So yeah, that's all for today's video. Really hope you enjoyed. To conclude, I don't think we're at the cycle top. I don't think we're in extreme froth conditions, but I think we're getting close. I think in the next push up is when you really, like, if we get into 130,000 region, 120, 130, 140, 150, you really need to be like, okay, at this point I'm going to sell 10% and 20% of my portfolio, 30% of my portfolio, depending how much money you've made and how much you're willing to risk. And if we do get a push even past that, you really need to be like, okay, this is extreme risk territory. I don't really want to be buying anything at these points. I want to really be a seller at these levels. And yeah, if we get anything past that point, you know, like, you probably need to sell absolutely everything. If we get well above 200,000, that's an extremely risky place to be holding, in my opinion. So yeah, thank you so much for watching. I hope it helped you, and see you in the next video. Cheers.